I would like to again officially welcome you now that the recording has started, to the December Club Leadership Webinar, our annual insurance review. I have with me tonight Marla Peters, is the Senior Vice President for Special Programs with American Specialty, and Renee Watterson, the Vice President of Policy Services. I am Scott Williams, and I'm Membership Director for the League of American Bicyclists and your host for these monthly Club Leadership Webinars. Marla and American Specialty have been handling the League's insurance for 11 years. We feel that they've really always done right by us and by our members, and the rare instances where there are misunderstandings, they have been able to rectify them, make everything right very quickly, and I think that everyone that has dealt with them has felt that they have really been on our side. And I know when we were talking this week, Marla, you were saying that a lot of people come in distrusting insurance, and maybe for a lot of valid reasons, but American Specialty has always proven that they are on our side and trustworthy in that. In talking about the program tonight, we're assuming a certain familiarity with the program, and we're not going to try to field many questions about the coverage basics and how the policy works. There are a lot of other ways you can get that information. When we roll out the 2013 insurance policy, we'll have a webinar in early January, which will cover the basics of the 2013 policy and also give you an opportunity to ask a lot of the basic questions about how the coverage works. You can also contact me, Scott, at bikeleague.org, or by calling the League and asking for Scott. I am happy to answer basic questions. If you called before about the insurance, you probably realize that I get out of my depth pretty quickly, and I refer you to Renee at American Specialty and give you her contact information. I don't know if we'll see the contact information or hear it later in the program, but you can also contact American Specialty or find the web resources. We do very much want you to understand the basics of how the program works and all the nuances so that you know how you're covered and you feel confident in that coverage. But because we have so much else to cover tonight, we probably won't get into very much depth on some of those basics tonight. But we do want you to get that information and are happy to get it to you in many other ways. And what we do want to talk about tonight is some upcoming changes, some sort of proposed that we need to talk out with you, some that will certainly be improvements, at least for advocacy organizations, just in terms of structuring things so it makes more sense, not just for riding clubs, but also advocacy organizations. So, having said all that, I would like to welcome our presenters tonight, Marla Peters and Renee Watterson. Marla, take it away.
Okay, thanks, Scott. I appreciate that nice introduction. And I am here with Renee. This is Marla speaking. Renee is probably the person that any of you who are involved at your club or advocacy organization in your day-to-day activities that involve insurance have probably spoken to Renee at one time or another. And so at some point, one of these years, Renee will have to be the main presenter as opposed to my support person. But anyway, we really appreciate the opportunity. We know this is sometimes a weighty topic and not the most fun, so we will try to make it as upbeat as possible and move things along and give you the information that you need in order to provide us with feedback and input that will allow us to zero in on final changes for the 2013 program to make it the best program we possibly can for the League and all of its members. So with that, we will just start getting into, if my computer will move it forward. There we go. The goals for the call tonight, I think Scott really outlined them well, but just to kind of go over it, we wanted to provide a insurance program overview, but not really an insurance 101. But give you a little bit of a summary to frame the discussion about how the program is currently structured and the participation levels and that type of thing. We want to give you information about factors that are affecting the 2013 program, and then talk a little bit about the intended plans for 2013. I want to make sure I make a caveat statement, especially with some of this being in writing, that none of it is finalized for 2013. The insurance companies have not necessarily approved some of the structural changes we're going to talk about, and the rates are not necessarily locked in. So we truly have an opportunity for feedback that could influence how we move forward for 2013, but we also did want to provide enough information that you could give us feedback based on real information or how we expect the rates to look. And so at the end, we're hoping to have, we're going to make sure we have time to get input back from all of you on the structural changes that we are considering, and also some decisions relative to the program benefits and how we may want to tweak the benefits to help control the pricing for the upcoming policy period. This slide, I know, has about 10,000 times more information than you are ever supposed to put onto one PowerPoint slide, but I apologize for that. But I wanted to put it all in one place. So the brief framework information, as most of you probably know, is that when you sign up for the League insurance program, you automatically receive the general liability coverage and the participant accident. So when you look at your rate, it includes both of those coverages automatically. And the general liability is the coverage if you end up finding yourself involved in a lawsuit that your club gets named in. So that's the liability piece. The participant accident piece is the one that pays for medical bills, excess of your members or participants in special events, their primary health insurance coverage. So it's somewhat of a goodwill benefit when someone is injured during an activity that you're able to help them be able to pay potential medical bills they have. 581 organizations purchased the coverage in 2012, and for the first time we know the breakdown that 83% identify themselves as bicycle clubs and 17% as advocacy organizations. Many of you, I'm sure, noticed that instead of asking you 2 questions on this year's enrollment, we actually asked for like 20 questions and provided you with a lot more information on the coverage based on your answers to those questions. And we hope that that was an improvement and you found it beneficial and that it didn't create a large administrative burden, because it was very beneficial from our standpoint to be able to gather that additional information. And it has actually helped shape some of the ideas that we are looking at for 2013. The way the premium works for the program currently is that to sign up, there are per person rates that apply. If it's a bicycle club, it's a rate per member. And if it's an advocacy organization, the rates apply based on your number of active members plus the average number of members who participate in your occasional rides, if you even have rides. Many of the advocacy organizations indicated they do not have regular type of club rides, and so that number was 0 in their case. You also pay separate rates per participant if you have special events. And what special events mean in the context of this program is basically an event where you charge a registration fee to participate. And then minimum premiums apply as well. And Scott, I just want to make sure everyone can still hear me.
I can hear you, and I have not had any other complaints, so
okay, good.
We're good.
Just wanted to check based on that 1 year. Okay, so the other thing is that there are optional coverages that you can purchase for your club, and these are things that over the year have been added either in response to trends in the insurance industry where certain coverages are becoming more available and more relevant for smaller organizations. And so we have always tried to keep the program contemporary and respond also to input we receive from clubs and advocacy organizations about the coverages you'd like to see. So we added a bike refurbishment coverage a few years ago. That is for those situations in which you are maybe taking in used bikes, fixing them up, and then either selling them or providing them, donating them to individuals who could really benefit from having a bike. And it doesn't apply to bike repair, just as a quick note, meaning if you are a commercial repair shop where you actually, people bring you their bike, you fix it and give it back to them, this is more for that first scenario I described. 19 clubs have purchased that coverage last year, or this year, I should say. It's still 2012. The directors and officers liability coverage, about a quarter of the clubs that participate in the insurance program are now buying the directors and officers liability coverage. There is non-owned and hired auto liability coverage available that about 10 clubs are currently purchasing, and that applies, I think those clubs that have purchased it, primarily it's not because they're renting a lot of cars on behalf of their club, but it's because they may be using vehicles as part of their events, and they wanted to have that extra protection for their club if someone were to get involved in an auto accident and the club got brought into a lawsuit as a result. If someone's driving their own car on behalf of the club, that person's personal auto insurance is still going to pay first, so keep that in mind. We also offered an opportunity to purchase excess liability limits. 11 clubs took advantage of that. The cost for that, on average, it's individually underwritten, but has ended up being around $250 per club. And then we also have an option to purchase participant accident coverage. That really applies for those situations where you have a ride that has a lot of non-members participating, but you aren't charging for it. So you don't pay the special event premium and register it as a special event, but you do want to voluntarily purchase coverage so that individuals who aren't members on that ride have participant accident coverage. And we've had 17 clubs who purchased that for about 30 different events that they were holding this past year. And then also a quick mention that LCIs automatically receive general liability coverage for their individual education activities that they conduct in accordance with the league's standard protocols and curriculum. So that is a brief overview. We wanted to then turn our attention to factors that are affecting the 2013 program renewal, and we are going to get into a little bit of the kind of cold reality type of part of insurance here. So the first one is a positive and happy thing, which is that we did gather a lot of new information that helped us better understand the demographics of those purchasing the insurance. We've received, solicited, and then also just in general received a lot of feedback on how we might be able to improve the program structure, particularly to fit advocacy organizations better, because it was originally 20 years ago designed to fit more the club model of a group of people who get together and they put on recreational rides. And obviously the world of cycling and advocacy has vastly changed over the last 20 years, and we need to make sure that our program is always evolving to be contemporary and to match up with that. So that's going to be a positive. The other factors that are affecting the 2013 renewal, and I know Scott mentioned, I believe, in materials to introduce what the topic of the call today would be, is that we have had in the program some large losses and some trends on the participant accident side that are driving rate increases and increases in the minimum premiums for 2013. And just to give you a little bit more background on what some of those things are, we had a $450,000 general liability loss involving a club. It involved, actually both of the two large claims I'm going to talk about involved a rider on the ride who struck a pedestrian from behind on a bike and walking path. So in both cases, there wasn't a lot of opportunity for defense because liability was pretty clear. Negligence was pretty clear on the part of our rider. And so those claims, that first one, we looked to settle that claim. And the injury occurred in 2008, and it was actually just settled recently in 2012, because a lot of times there is that length of time that passes with when you're involved in litigation. We then, in 2011, an injury occurred, similar circumstances. This one was on a special event, and again, a rider who was a relatively inexperienced rider struck a pedestrian from behind, and he suffered a broken hip and has had some complications, and so that also is a $400,000 plus loss that is currently in litigation. So that is not helping us with the general liability portion of the program for the renewal this year. Years where we have very few losses, which is many years, help offset these years where we have the more substantial claims. And obviously the reason you're all buying insurance is because of those type of situations we just talked about. But even when you aggregate everything together, the historic loss ratio on this program is above where the insurance company finds it acceptable. And in addition to that, as the last bullet says, the insurance market conditions are tightening on the commercial side, and businesses are seeing rate increases in many different lines of coverage, even when there are no losses involved. I can tell you that our company, with our sports and entertainment focus, most of our clients are receiving, on the general liability side, a minimum of a 10% rate increase for 2013. So we have kind of both those factors coming at the same time with this particular year's renewal, which is causing the general liability insurer, their initial indication is that they're looking for a 20% increase. And we had talked to them about spreading that increase, splitting it so that it's more heavily weighted on the special event side than on the club rates where you sign up initially, with the idea that, and again, this could be an area where you may all disagree or have different ideas, but the idea was that you may be able to pass along the cost increase on the special event side to those participants than it would be to have a membership dues increase. So we're going to be looking at that. On the participant accident side, the losses have been steadily increasing since 2008. The participation in the program has also been increasing, and as Andy Clark, the executive director of the league, pointed out, that more people are riding and more people are participating in your clubs, and that is all positive, and that's what we're all about. So that is positive, but it can, in turn, end up causing increases on benefits like participant accident that covers medical bills for somebody who has been injured in an accident. So in 2000, just to give you a little bit of figures on that, in 2008, the participant accident losses in total were 75,000, and they're projected to be over 260,000 for 2012. And the increases are outpacing the increases in the club participation. So if you looked at it as an average claim per participating organization, it went from $150 in 2008 to projected to be over $450 for 2012. So the claims are just increasing on the participant accident, and we're going to look at a slide later that shows that the rates have remained relatively flat, which means all of a sudden the insurance company is losing a bunch of money, in which time they say, we don't like losing a lot of money, so we are going to look at rate increases. I know we are all familiar with that in our personal lives as well. So a couple interesting things on the participant accident claims to note that I thought were interesting, at least that we looked at, is that over 2/3 of the claims are from club rides and not special events. So either because there's more frequent activity with the club rides, or because people do a better job of reporting those and following up on those. For whatever reason, more of the claims are coming from that side of the program. Also, over 90% of the claims are from individuals who have other insurance. And so that is an interesting statistic from our perspective, since all we do here at American Specialty is insure sports organizations, and we work with a lot of amateur sports organizations. And that number is very good from the league's perspective, because in many organizations you have a higher percentage of claimants who do not have other insurance, And when they do not have other insurance, that means your costs, because you're paying what's not covered by other insurance, end up being a lot higher. So your claims would be higher if you had more people who didn't have other insurance. So that's just something to keep in mind as we're talking through this. Let's see. So I wanted to switch gears a little bit, just having provided that background. So we've got kind of some different things going on at once. We know the insurance companies on both sides of the program are looking for rate increases, and we also know that we wanted to make some structural changes to the program to make it a better fit, primarily for advocacy organizations, but there's a piece that we were looking at for the bicycle clubs as well. But just to go through the advocacy organization piece and kind of give you an overview of what we were thinking about. And again, if there are advocacy groups on the phone, it would be great to get their feedback on if this seems like a wonderful thing or a terrible thing. We thought it made a lot of sense based on what we've seen in the responses to the enrollment form this year. The reason all these numbers have question marks after them is just the same reason I said at the beginning of the call, which is that none of this is finalized, and I am concerned on some of the numbers if I may be optimistic about what we can get the insurance companies to agree to, and I would not want anybody to feel that these are final or that it's something we can't accomplish at this level. But we're looking at, for the advocacy organizations, right now how it works for them is that when they sign up, we ask them to report how many active volunteers do you have, and then if you have club rides, how many people participate on average in your club rides, how many of your members. And those numbers get added together and the rates applied, and then the minimum premium is applied, and many of the advocacy organizations are at that minimum premium level, not counting their special events. We were looking at getting rid of the reporting of how many people, since it doesn't really apply as well for advocacy organizations who often have very large membership lists, but they're not people who are participating on rides. And so the way it would work would be, if you don't have any rides, you would have a flat fee. You would only have the general liability because you don't need the participant accident if nobody is participating in athletic activities. And then if you do have the infrequent occasional rides, you would pay a higher premium, and that would provide both the general liability and participant accident coverage. The special event piece would be handled the same as it is currently. So if you had a special event, you would sign up for coverage and pay based on the number of participants in that special event. And then there would be a flat premium applied. The one for year-round office space is new, and that really is a charge from an underwriting perspective where it's a little bit of the insurance keeping up with what's going on out there. Usually we do assess a charge when the organizations lease office space or they have a year-round office exposure, and we have not been doing that in this program, so that would be a new charge this year, and it would, based on the responses to the enrollment last year, would affect 35 of the advocacy organizations that enrolled. There were about 95 total. From an education perspective, and this has probably been the area where we've received the most feedback and where maybe the program has not kept up as well by trying to just use the old format to fit with new activities. But we know that 68 of the advocacy organizations said that they do conduct education and deliver education services in their communities, which makes a lot of sense. It's not surprising that the majority of them do. So we were looking at if they provide classroom-only type of services, there would be a flat fee. And if they use LCIs to conduct their education courses, they would receive a 25% premium credit on that flat fee. The flat fee isn't per class or anything like that. It's just that much for the whole year. And again, the numbers are what we're still not finalized, but that's roughly what we're kind of looking at. And then if you have education where you actually have an on-bike component, either in a parking lot or on open roads, however you conduct that, that you would pay a higher rate, and that higher rate is surprised of the general liability carrier charging a little more because they feel they have more exposure when there's athletic activity involved, and then there's a participant accident premium in there as well. The bike refurbishment coverage would still be available just like it is now. And then one of the things we're looking into further is that while we feel that promoting a Safe Routes to School program is inherently already covered in the league program, so you're sending out materials, you're advocating that people set those up at your local schools, that's already covered, but we kind of made the distinction that if you are taking that extra step of actually setting up a program and working more closely with youth, that there may be some other coverages that aren't in the league program right now that you would need that are more specifically underwritten in the insurance industry. And we're trying to, what we want to do is just gather a little more information to make sure we're not overly concerned, maybe that it's not as involved as we think when an organization is organizing a Safe Routes to School program. So we want to do a little more research there because we do want to be able to accommodate the different types of activities that the league's members are participating in. For the bicycle clubs, everything's pretty much would stay the same under the structure moving forward for 2013 other than the rates. But the two structural changes that we were looking at is the year-round office space, which very few, I mean, we're talking about hundreds of clubs participating and only 5 said that this would affect them. But doing the same charge approach for the education that we just talked about for advocacy organizations. Right now the program's kind of confusing because if you do education but you don't charge for it, it automatically just kind of gets thrown in there with your coverage, but you don't have any participant accident for the people in the class because they're not your members. But if you do charge for it, right now the way you have to do it is you have to buy special event coverage, which has a per event minimum premium, which some clubs have told us has been very difficult to manage because it's the $88 or $83, I can't remember, $88 per event. So for each class you have, if it's a class with distinct and different participants in it, you would end up paying that. So if you have a 12-person class, that's obviously an expensive proposition. So this, again, would take it out of the context of having to count them or having to know if you're, it takes out that whether you're charging or not for it, which is a little bit, doesn't really fit when you're talking about education, the same way it does for rides. So that's what we're looking at there. We did want to show you, this before we show you the next slide, which the next slide is talking about the 2013 rates, but just to kind of look at how the rates have changed historically during the course of the program. You can see, starting in 2007 that, or really in 2006, the rates have remained relatively flat or have decreased overall. So we've been able to hold things in line for a number of years, even with that increasing trend on the participant accident claims I talked about, and with having had one of those 400,000 plus losses occur in 2008 and then develop to become larger and larger over the last few years. Things have really been held at that level, but I think this is a year when there's going to be a little bit of a correction year, and so the next slide talks a little bit about that. And it looks overwhelming and like, so many numbers. But to try to explain it, what this is showing is that because we knew, especially on the participant accident side, that the insurance company was going to be looking at a significant increase, we asked them again this year, like we did last year, to give us options where if we changed the benefits, we could help control the change in the pricing. So we have, what this represents is a bunch of different options for the participant accident. Now the rates that are shown here are still the combined rate between the general liability and the participant accident, because that's what you are all used to looking at. You don't look at the breakdown between the two, so we're not showing that here. But just to kind of cut through it, right now, if you look at the top of the screen, the rate for if you have fewer than 1,000 members is $1.80, and the minimum premium is $88. What we're looking at, if we kept everything the same in 2013, is a rate of $2.30, which is a 27.8% increase. And the minimum premium is where there's somewhat of a jump. And again, this doesn't affect everyone because a lot of people weren't at the minimum premium level. But for those that do, it's obviously notable to them. And that will go from $88 minimum to $123 minimum, which is about a 40% increase for those people who are at that minimum premium level. If you jump all the way down to the bottom of the screen, the reason we broke out the club and special event, if you look at, is because for the first time in 2013, like I mentioned, we were looking at applying a different increase to the special events on the general liability than on the club premium, and so that means we can't compare them the same way we have in the past. They're not just necessarily the same for both of those. So, but if you jump down to the bottom, if the league were to choose to go to $1,000 deductible instead of $500, and were further to change from a disappearing deductible to a corridor deductible, which I will explain what that is, then you could keep the increase down to a 5.6% increase in terms of the rate and a 22% increase in terms of the minimum premium. And then a little higher for the special event side of it. So that kind of shows you the two ends of the spectrum. The one at the top is what you have currently. The one at the bottom is what I would consider a substantial decrease in the benefit. The other thing to keep in mind is that this is just the participant accident that's changing in this model. And the participant accident, if you talk about the number of claims in 2011, because that year is complete, we had 92 claims. So obviously that's not a large number in the scheme of how many participants we have with 580 participating members and then all the members of all of those 580 organizations. So the relative number of people impacted is very small, but at the same time, we talked about this same exact dynamic last year, and the overwhelming feedback was keep the benefits the same because the participant accident has been a huge selling point, because in effect what it ends up doing with the disappearing deductible is a lot of your members, if they are injured, end up paying $0 out of pocket. So even if they have a $5,000 deductible on their health insurance plan with a 20% copay, they can end up not paying any of that out of pocket. So that's where it, is a significant benefit for those 92 people who did get injured. The rest of the people don't really see a benefit from that. And then for those small number, about 10 people who didn't have other insurance, obviously it's even more important because they didn't have any insurance and it pays first dollar after our $500 deductible in that case. Actually, those are the people, though, less impacted by it because they had to pay the $500 already. So that shows you kind of the two ends of the spectrum. Everything in the middle is, and hopefully while I'm talking you've had a chance to maybe digest it or understand it a little, just show interim. You could bump it up a little and keep the same approach, or you could keep the same level but of deductible at $500 but change to the corridor approach. And here's the slide I wanted to show just to give you some information about the difference between those two. With the disappearing deductible, your primary insurance payments can meet the league's deductible, which is what allows you to potentially pay $0 out of pocket. With a corridor deductible, you always will pay the league deductible. So if you pick 500 corridor, every time someone gets injured, they have to pay $500 out of pocket. If you pick the 1,000, every time they'll have to pay that 1,000. It won't matter what their insurance paid on their behalf. And this illustration just shows that example, that if you had someone who had $6,000 of medical bills and their primary paid $4,000, so they end up with $2,000 that they owe. With the disappearing, that individual will pay $0, and the insurance company will pay that $2,000. And that's because when you look at the primary payment line, they paid more than the $500, so it was met and it disappeared. With the corridor, as you can see, it doesn't matter that the other insurance paid the at least $500. The injured person has to pay it anyway. So in that case, the insurance company saves the $500 and the individual pays the $500. And the point of the insurance company paying less is why the rates are less when you look at it. And it's also why you can see that the rates are only significantly impacted when you switch to that corridor deductible. You don't gain as much. You know, going from $500 to $750, you're only getting 3 cents off of a reduction, so it's not as notable, for lack of a better term. So that was a lot of information, I know, to throw at you all at once and a lot of slides, and I hope that it made sense and that you have kind of had a chance to take it all in. Like I said, we're looking at, if we were just looking at the rates, it would be one thing. If we were just looking at structure changes, it would be one thing. But since we're looking at it all at the same time, I know it kind of adds to the complexity of it. But those are the things we are thinking about, and what we were hoping to do now is to have some discussion around what your thoughts are, having seen that information. And we can go through it systematically and talk about the structure first and then talk about the benefits, or if people want to just start the dialogue and we'll go from there. Scott, I know you're going to help manage that with people writing in and or raising their hands, so I'm not sure what type of comments you're getting.
I have a few. Those that haven't weighed in so far, you can find your yellow hand button if you want to ask a question or make a comment out loud. Raise your hand. I will be calling on at least one person with their hand up here shortly. I hope you're ready to speak out there. We have, and I think once we've discussed it a little bit, I'm going to open up a poll and just try to get an impression from the people who are here tonight. How they feel about some of those options in terms of the deductible and the rate changes. I will probably poll our clubs in a larger sense in the next couple of days to try to get a sense of direction, because in this we are definitely working for you. The league does this insurance program to serve the clubs. We don't get any of your premium. The league is not making money off of this directly. I mean, I think that it does compel a lot of people to join, but whether you choose after joining to get the insurance or not is not anything that benefits us financially. One question I think is an excellent question is whether there's going to be options on the deductibles. Could we offer a program that allowed some clubs to make one choice and other clubs to take another route? Some clubs to pay less, some clubs to offer more benefits. Would that be an option?
That is an excellent question, because it is something we have talked about here, and it is we have not talked yet about it to Mutual of Omaha, which is the participant accident insurer. So we don't know what their thought will be, but I do know that if there's a strong indication from the clubs that that is important to them, that will help us to sell it. That, you know, it's a little more difficult for them to price it because they don't know who's going to buy what. So that creates in their modeling some challenges. I think, you know, from an administrative standpoint, we can do it within the online system, and it can be seamless, and our claims adjusters can know who bought what, and there's not an issue there. We've already talked through that. I had some concern if we were to offer because where the pronounced difference is between the disappearing and the corridor. And so my only concern there was that sometimes that concept is not so readily apparent, and I had a concern if people bought the corridor just because it's less expensive without really understanding what it meant. But that would be my only thing that gave me pause if you were to let people choose between the two deductible types, as opposed to just letting them pick between two deductible levels. So I'd be interested in people's feedback on that.
Okay, and I'm getting a lot of feedback on the questions. People are typing in their preferences. I am going to open up a poll just here, maybe in a second, do a little more discussion before I do that and make sure people understand the choices. We're not going to vote on all 6 of those options. We've narrowed it down a little bit, and we'll look at that in a second. And I will take feedback by phone or by email tomorrow. I'm Scott, the membership director. My direct line is 202-621-5453. I am Scott, SCOTT, at bikeleague.org. I have a hand up, and I am going to call on Alan Forkosh, the Grizzly Peak cyclist. Alan, did you have a question or a comment?
Well, yeah, actually I had two. The first one is just to clarify education. Education to people who are already club members is covered under the general, or would that be covered under, or would you need to also pick up the education section of insurance?
We hadn't distinguished between that, and the reason being when we did the enrollment last year, almost everybody who said they did education said that they provided education to non-members. That wasn't every single person, but it was the vast majority.
Yeah.
So we had centered the benefit around the idea that if you say you provide education, that charge would apply, and the distinction would be whether you have on bike as part of that or if it's classroom only.
Okay, fine. Yeah, because we have made joining the club a requirement to do, you know, we do like 2 or 3 training seminars a year, but we only open it to club members. And you know, our club membership is nominal, so some people join, frankly, to get the education, but, you know.
Right. Well, and that, again, is something that could be, you know, there could be the idea that if it is only for your club members, that that charge wouldn't apply. That is a possibility.
Okay. The other thing, yeah, I was going to notice, just in terms of structuring things, I think in terms of how to structure the choice, we really need to emphasize the major differences between disappearing and corridor, and probably a set of examples at various different scenarios would be good to supply to the clubs, to the folks who haven't, you know, who don't have the time to sit down and work out everything themselves. That's it.
Something similar to the this slide, but with more examples.
Correct.
More
yeah.
scenarios.
More scenarios, you know, because this is going to go out to folks who haven't seen any background or anything, and it, you know, give them a much clearer. If you have more points, you tend to get a clearer idea than just seeing one point, I think.
Right. Okay. Thank you.
We will try to do that. I think we had put together some examples last year when we had this discussion facing a similar question, and I will get those out to people, especially if we're having ongoing discussion and getting additional input.
Yeah, I think I wrote 1 or 2 of those, actually.
Excellent.
Well, you may see them again.
Right.
Well, one interesting point on the just about the participant accident that I don't believe you mentioned, it seemed like for most years recently, Marla, from the report that we were discussing the other day, the average claim for participant accident was $2,000. Or the average payout, I guess, was $2,000
right.
From your standpoint.
Right. Currently, it's right at that level.
So that, you know, you can see the impact of the various deductibles and how that might change. I am looking through the questions. So in terms of the deductible being paid on the insurance, someone asked, does the member pay the deductible, the rider, or does the club pay the deductible on a claim?
The rider pays the deductible. The way the claim process works, I mean, a club could make a different policy internally, but the way the claim process works is that once the club turns in the incident report form and validates that this, in fact, was an incident that occurred at one of their events, we switch to working directly with the injured party, who then has to send in their explanation of benefits from their primary insurer if they have primary insurance, and we work directly with them and we assess any deductible that's owed to them. Whether the club then has a policy to reimburse would be something the club could do, but we wouldn't know that information here.
Okay. I am looking again at some of the questions. Some of them I'm going to try to handle offline. So, Marla, do you want to take another stab, or should I take a stab at exchanging the difference, at explaining the difference between the deductible types? And then I think we're just going to take a quick poll and get a sense of where people stand.
Sure. I mean, to me, the best way to think of it is, and Scott, you can then say, because I may be in my own insurance world, but the best way to understand it is that if there's a disappearing deductible, somebody, either your primary insurance company or you, has to pay the $500. So if you had, to use a different example, if you had a $1,300 medical bill and your insurance company, you have a $1,000 deductible on your health insurance, so your insurance company paid $300 and then they sent you a bill for $1,000. So you would send us all of that and we would see that they had paid $300 and that you owed $1,000. And we would say, okay, well, the primary insurance paid $300, so they met $300 of the league's deductible, but there's $200 of it left. And someone has to pay it other than Mutual of Omaha. So in that case, you would pay the injured person the $200, and Mutual of Omaha would pay the $800. So there are situations where it doesn't disappear altogether. Now, in that same situation with the corridor deductible, $1,300 bill comes in from your insurance company. They pay $300. They leave you with $1,000 left. You send it in to us. We're going to say, we don't care that your insurance company paid $300. You still owe $500. So in that scenario, you would pay $500 and the insurance company would pay $500. So you can see, basically that amount getting passed along to you instead of the insurance company in that example. So with the disappearing, you paid $800, with the disappearing you paid $200, and with the corridor you paid $500. So that's another example to kind of go along with the one that's up on the screen, where it shows more of a it disappeared altogether scenario.
I guess the way that I would try to explain it simply, which I don't think is saying things a whole lot differently, but just the way that I think about it. First of all, it doesn't matter which type of deductible if the crash victim, if the claimant does not have insurance. Regardless of what the type of the deductible is, they are going to pay that amount of deductible before this insurance kicks in. So we're really only talking about a difference for someone who has some other medical insurance. With a corridor deductible, you, the accident victim, the claimant, you must pay the deductible amount before you get anything from this policy. You must pay it. With a disappearing deductible, someone must pay that much before this kicks in, and that someone is your other insurance company. Your other insurance is paying at least the amount of the deductible that is here. Then the insurance through the league will kick in, and
Right.
and you may well not pay anything.
Yep.
So that's how I think about it. I don't know if that's helpful. We've thrown it at you a bunch of different ways. Renee's the only one who hasn't explained it yet. I don't know if you do it a different way, Renee. But
You guys did a great job.
okay. So I am going to go ahead and just put this poll up here to try to get a sense of this, and I just realized I have the wrong year here, and so I'm going to change my typo real quick before I put this up. If you don't understand or you don't know yet, don't feel obligated to answer and vote in this poll. I expect you will have another opportunity to try to understand and another opportunity to express your preference, certainly directly to me by email or by phone, but also perhaps in another survey as we try to make sure that we are serving people. But here it is. I've narrowed it down to sort of three options, kind of on the corners of the chart that we were looking before, which is maintaining the current disappearing deductible at $2.30 a member, switching to the $500 corridor deductible, which means the person that has the claim must pay the $500 regardless of what might have been paid by other insurance, or switching to a $1,000 corridor deductible, which means $1,000 must be paid out of pocket at the lowest of the prices there. And so I'll give people a chance to weigh in. Again, happy to field questions or talk to you about this tomorrow. And someone has asked, it said it would be useful to add a slide discussing the difference between the disappearing versus corridor deductible before we offer this, before we make the slides available tomorrow, just for people that are trying to explain it when they go back and discuss it with other club members. And if you could, looking at, people can't see your screen right now, Marla. Can you tell us again the minimums on these three options?
The minimum premium as opposed to the rate?
Right. So the minimum premium would be how much for maintaining the current participant accident coverage?
$123.
$123 minimum for the first choice there. For the $500 corridor deductible?
That is $118.
$118. And for the $1,000 corridor deductible?
$108.
Okay. $108 on the third. So here's a question. Must the same deductible choice be used for club insurance versus special event insurance? We hadn't really considered that. Do you have any thoughts on that?
What is the question?
Do we have to offer the same deductible choice for basic club coverage, what's provided for clubs, and what's offered as special event coverage?
I would say yes, only because I have concerns. I'm not 100% optimistic about even getting Mutual of Omaha to offer different options within the program. So to offer different options for different types of events to the same insured club, I feel like they're going to, I don't feel optimistic about getting them to agree to that. But that does not mean I would not ask, and I would not say that I thought 100% they should do it. But I just think that level of complexity and not knowing what people are going to select makes it harder for them to determine whether they think they can move back into a position of not losing money next year.
Yeah, I guess one thing that they don't like is uncertainty, right? That's the insurance.
Right, because we have a history. I mean, one of the things that benefits the league is having the historic information, because it's never good when the insurance company has to guess and make a lot of assumptions, because they tend to be conservative and they assume the worst. And we have data on our side, which has helped us in a lot of years, but it's just that in recent years, for whatever reason, if it's medical inflation or more people participating, or better, we're better educating people about the availability, the usage of this benefit has gone up, faster than the participation in the program for faster than the rates have allowed for. Are you still there, Scott?
I'm still here. I was sitting here talking, and the mute button was on. I muted it to cough and then never turned it back on. Sorry about that. Okay. So can you see the poll results, Marla, which I just explained so poetically and at such great length to myself?
I don't know if I can see them since my. I don't know. It says showing poll results, but then I don't see them.
Okay, 53% supported maintaining current benefits. This is with about 72% of people voting. 37% preferring a switch to the $500 corridor deductible, which is a trade-off between cost control and benefit reduction, and 9% wanting to keep costs near the same, which is a $1,000 corridor deductible, the cheapest of the options. And I am going to close this because people want to see the overview slide again. Thank you for your input, everyone. So I do have a lot of questions here. So one person was asked, regardless of the deductible, the maximum payout on participant accident is $10,000. Is that correct?
Yes.
Okay. And one person was asking, in light of the $10,000, how we had $400,000 claims. Do you want to explain that again, Marla?
Yeah, that is two different concepts, so I may not have differentiated them enough. The $400,000 claims are on the general liability policy, so those were lawsuits. So in that case, we had a rider hit a pedestrian, in both cases, from behind, and in both cases, the pedestrian sued the individual rider and the club. And so the general liability policy is the policy that pays for the attorneys to defend you as a club or as an individual member of the club who was involved in this accident. And it also pays if there is a judgment against you. So if you go to trial and you lose and there's a judgment against you, it pays that. In the first case, that is actually a closed case, there was a settlement that did not go to trial. And that is what, between paying the attorney fees and paying the settlement, added up to that much. The other one is currently in litigation. And so the over $400,000 is an estimate of what we think it might end up to be. That could be way low or it could be high. We just don't know because it's currently ongoing. So the participant accident is something, as the person who asked had pointed out, has a $10,000 per injury per claimant limit. So where we get to the, we think there's probably, well, we know in the 2011 policy year about $240,000 of losses under that policy, and probably in the current year will end up being closer to $280,000. And that is the result of all those individual claimants' bills being added together and paid by the insurance company. And that's a claim where those participant accident bills are not in any way involved with negligence or anybody having done anything wrong or anyone bringing a lawsuit. They are simply, if you're injured during a covered event, your medical bills, excess of any health insurance, can be paid under that policy.
Thank you. I know that a lot of the comments and questions that I'm getting here, a lot of people are going to have to go back and explain this to their boards, to other officers in the club, and get back to me with feedback. If there's anything else, aside from additional examples to help you explain the corridor and disappearing deductibles, anything else that you would like to see in the slides, please email that to me or let me know in the questions here so we can have something together early tomorrow to get to you, so that you can go and spread this information among your clubs. Let me know. One comment that I've received from Ron Grooms, who has left, but expressing strongly in favor of keeping the current structure, saying they were only talking about a difference of $20 savings to incur an additional $500 out of pocket. Looking at it this way, it's only an increase of 50 cents per member. So that was one comment just in support of keeping. Someone has asked if there is a possibility of separating the general liability for special events, which sometimes, if you're putting that on, the municipality or property owners are going to require the special events. If a club didn't want to offer the participant accident for participants in a special event, is that something that we could split off? Would that make any difference in the resulting rates?
It's not something that we are able to do with the current general liability insurer, and I would say most insurance companies that specialize in or agree to provide coverage where athletic activities are involved, they generally require the participant accident coverage if they are going to provide the general liability. And the reason for that is the idea being that if you pay somebody's medical bills, they are less likely to sue you. And so if you can pay somebody's medical bills for $5,000, it's probably a lot less expensive than paying an attorney to defend you. Even if you ultimately win, those costs will probably be a lot more. And so the general liability insurers usually require that as an offset. And I know that is the case with the league's current general liability insurer and those that have been on the program in the past.
Well, and I also think, and maybe you just said this, I get a little distracted with all the questions coming in, but one point that you had made when we met on Tuesday of this week was just that the participant accident in some cases it can be a defense against a general liability claim. You're taking care of people, they're injured, and you're saying, we got this, we have insurance that's going to help cover your medical costs, and that might prevent them from coming back at you and, with a liability claim or a lawsuit. Did you just say that while I was reading questions?
I don't think I said it the exact same way, but that concept, yes, that's generally why the general liability insurers they require it, and so we can't just split it off and make it optional.
Right. Somebody asking about the minimum premium. So you pay your insurance based on the number of members, but the minimum you will pay is the minimum premium. So it's $2.30 a member. If your club has 10 members, you're not going to pay $23. You're going to pay the minimum amount of possibly $123. That's the minimum premium. If you have more than, in this case, how many members does it take to get you?
53.
53 members. So the minimum mainly affects organizations, clubs that have fewer than 53 members. If you have more than that, the minimum premium doesn't apply to you. Advocacy organizations who are not paying for all of their members, which in a lot of cases means supporters, they're dues paying, but they're not riders because they're not doing a lot of rides. A lot of advocacy organizations were paying at the minimum premium level, and we're trying to restructure that so the increase in the minimum premium might not affect clubs or it might not affect advocacy organizations in the same way. I have a question here asking about PA and LCI. I think just clarification of terms. PA is participant accident. LCI is league cycling instructor, who are also covered by sort of a different portion of this policy. And I have some more questions here. I think I'm going to try to handle a lot of these questions offline, either in direct emails to people or just in general notes to send out. I think that we'll go from there. Marla, did you have anything else that that you wanted to add before we wind up for the evening?
No, I don't. I just appreciate everybody taking the time. Like I said, I know it's a lot to take in. I do want to caution again that none of these, so if people are sharing with their boards, to please, I would hate if some of the numbers don't at the end up the exact same for people to feel like this was a final representation, because we still have some work to do on selling the insurance companies on the concept, for example, with the advocacy organization restructure. But I feel confident about them, but yet I still, because of the nature of my job, have to have a million disclaimers. Now I feel better having said that. Thank you for listening. But I really do appreciate people taking their time, and all of the feedback really does go into a lot of changes that we've seen and been able to implement over the years. We didn't go back and review all those, but it really has evolved over time, and hopefully for the better, and that people will continue to give us their ideas and feedback on how we can make this the best program for the league.
Okay, thank you so much, Marla, for the work that you do for us and for our clubs. Thank you to everyone who joined us tonight. Again, I'm so very impressed by the dedication that the club leaders show to understanding the insurance and making the insurance work, and that dedication to the safety of the people that they ride with. So my appreciation to you for that, and I will get back to you, try to answer as many questions. I will have a record of the questions and who asked them, and we'll try to answer them offline by the end of the day tomorrow, and we'll also push more information out to help you explain this to your clubs, and so I can get additional feedback from you. Thank you very much.